Good morning, everyone. This is Doug Campbell with Right Way Options in your morning market preparation video for July 11th, 2017. Well, yesterday we had the bulls in control. They did try to follow through yesterday and they were pushing, but volume turned out to be so light. There just wasn't, the bulls, half of the team must have stayed in the barn. They just didn't want to come out and face the summer heat, I guess. And so consequently, we just had volume has just been declining here. And that always bothers me. That always worries me that we have declining volume in a market trying to rise. But all in all, they attempted to break through this resistance level here. And this resistance level just proved to be too strong yesterday. We bumped up against it, banged against it several times yesterday on the intraday, and then ended up pulling away from it into the close on the diamond. So unfortunately, we just couldn't get through. There just wasn't enough energy. If we look at the SPY, we see kind of the same thing. We rallied up to that resistance level of the down of this uptrend line that we had failed, rallied up through it, and we popped into this resistance level right here, and then we retreated from it at the end of the day. Just couldn't quite maintain enough strength. It's bullish, it's positive, it's great that we've moved up, but we also have to deal with the fact that we just wasn't quite able to hold on to that level. So let's take a look at the Qs here real quick. Qs also rallied up, but they held on a little bit better. What we do have to recognize, though, is the Qs is in a direct, a full-on downtrend and running straight into resistance. And I would not be at all surprised to see the Qs even break through that, come up here and test somewhere in this area before it actually turns around and fails. Now, this morning we have futures actually pointing just a little south. Nothing major, just a little bit of bearishness showing up in the market this morning. I suspect we're going to continue this back and forth chop until we get something that really shakes us loose, and I think that's probably going to be earnings. When the next round of earnings kicks off, the big banks will begin next week, and then we kind of roll up into earnings. And I think the market may be waiting for that. They're waiting for proof that we can support these prices. But we will see. Right now, IWM, again, it tried. In fact, it was doing such a brilliant job of it yesterday. Ran up there, kissed that price resistance level, and I mean kissed it almost to the penny, and then pulled away from it, just as if it was Superman and kryptonite. It could not get through there. Now this morning it's showing, a lower open, so we have to be careful when we trade a market like this, and we're currently pushing even just a little bit lower in the futures. Nothing bad, but it could turn bad if we start breaking some support levels. So watch those support levels carefully today. If they start to break, watch those. Watch out, because those bears may come out to play if those support levels start to break. So be careful. On the economic calendar today, we have the JOTS report, which is the job openings number, and that's expected to pull back just a little bit today. Nothing major. It's still running there's about 1 million jobs available, more than those that are getting filled, which means it's kind of an employees market, which is a good thing. We haven't seen wages really start to increase yet, but hopefully that will soon begin to happen as well. So as we move forward into this market, we want to be a little bit careful and cautious going forward. When we look at the earnings calendar, we have 17 companies reporting today. None would be anything that I would suggest would be really, really strong, or anything that would be a market moving event. So with that in mind, we're kind of stuck here in the middle again, and I personally am kind of expecting a lot of chop. It's important in this kind of a market to maintain your discipline and maintain yourself in your trade plan. Be very, very careful, okay? Let's see, what else was I going to talk about? If we take a look at the VIX, back down here, we popped out of this zone up here for just a little bit. Now we've pulled back down. Fear seems to kind of be subsiding again. So we're back down in this kind of what I call the danger zone here, the VIX, the area where it could really move quickly to the upside if something starts to fail. Now, I'm not trying to predict that in any way, shape, or form. We can stay down here for a long period of time. But this is that area where you want to have a little bit of concern that we're a little bit too complacent in the market and that a reversal can occur. So just watch that carefully. Hey, if this is the first time you've watched one of my videos, please do me a favor, do yourself a favor. Click on that subscribe button on YouTube and click on the follow button on Facebook. I'd really appreciate it, because I put this information out every day. This is part of my daily routine, is to prepare myself for the market. I don't believe in luck. I believe in preparation, and being prepared for the market day is extremely important to me, and I just happen to share that. And if you find any value in it, wonderful. If you don't worry about it. But if you find some value in it, please click those subscribe and follow buttons so that you can be notified when I put this information out every market day. Everyone have a great day in Right Way Options. I will see you normal time. And everyone have, I just wish you all great success today, great profits, okay? Everyone take care. Talk to you all soon.